previously, I was vehemently sticking with the 50-30-20 rule. It is very simple, right? You allocate 50% to your necessities, 30% to your wants, and the remaining 20% you save it, set it aside for your future self. But then as time passed, I find this budgeting method a bit rigid. Okay, in that, how do you determine exactly what is a want and what is a need? On the surface, it sounds simple, right? But when you go and buy your groceries, well, obviously a salmon is more towards a want lah. But butter, let's say if you use butter to cook, what sort of butter do you want to buy? Do you want to buy a more expensive butter or you want to buy a cheaper butter? Although it's a need, you can see it's a bit more skewing towards a want already. Which is why these days, what I do is just, save 10 to 20% of my pay first, send it to a different bank account. Then the rest, just spend on what I need or what I want. Okay, and that method so far, these few months, has worked out wonders for me lah. The next strategy that I employ is to also pay myself last. So the first strategy, pay yourself first, you save 10, 20%. Then I also save any remaining. Okay. Now bear in mind, I can spend this remainder. Okay, and if you follow this method, you can also spend this remainder. But if you don't want to spend it, you can carry forward the leftover balance. And just imagine, right? End of February, you have like 130 ringgit left. But for March, suddenly you carry forward that balance, your quote-unquote salary has increased by 130 ringgit. Now, with that said, this is the salary flow. Okay, my salary comes in through Maybank. There's no particular rule on this. As long as your current bank doesn't restrict you from transferring funds out, that's fine. Then I immediately send 10 to 20% to emergency funds first. Yeah, because some months, if there are any unexpected events that I need to pay for, I tend to draw from my emergency funds. Then obviously the next month, I will prioritize topping it back up first. Yeah, the norm is to have at least 6 months of your income, not expenses. Therefore, if you earn 5K per month, then your emergency funds should at least be a healthy 30,000 ringgit. So I split it between Versa, Rise, there's also ASM, which I didn't list over here. But unfortunately, ASM is very limited for non-boomies, right? So whenever there's units for ASM and I'm low on emergency funds, I will transfer some over to ASM. Alternatively, I will use these two options, Versa and Rise. Then after that, once I settle my emergency funds already, I proceed with investment. In that, I use Rakuten to invest in US stocks, ETFs. Versa itself also have a few funds, but I'm mainly using Versa to invest in Versa Gold. Then a large chunk of my pay, 30 to 40%, actually goes towards AEON Bank. And this is my main spending account. Well, because the Pink Bank is currently offering very good cashback rates, 0.5 to 4%. 0.5 applies to all categories except non-Sharia merchants. 4% is their promo right now. They're running a promo until December, which if you buy groceries from any grocery store, you'll get a 4% cashback. Okay, so this becomes easily my main spending account. Previously, it was GX Bank when they used to offer 1% unlimited instant cashback. I'm sure if you were an early GX Bank adopter, you would know. Okay, but unfortunately, right now, they reduced their earnings rate from 3% to 2%. They also removed their domestic cashback entirely, as you can refer to this table over here. Yeah, the only cashback right now is for overseas spending with the purple debit card, which makes it an amazing travel card. So then next, another 30 to 40% of my pay goes to Touch and Go. Now, Touch and Go, I'm sure you know where it goes to already. It's obviously the Go Plus feature. It's a very good feature, a maximum deposit limit of up to 20,000 ringgit. You get paid every day. I mean, if you're using Touch and Go already, right, might as well just use their Go Plus feature, okay? But for me, I take it a step further. I use it as an alternative payment method because these days, everybody is paying using Touch and Go e-wallet anyway. And then the remaining 5 to 10% of my pay goes towards GX Bank. This is just in case that these two options, sometimes you're a bit unfortunate, they go under maintenance together, right? At least you have a third payment option. So if you are currently, managing your salary and then you're only putting all of your funds in one bank account, it's not very ideal lah, because this yellow bank over here, right, always go under maintenance one. After 12 a.m., I don't think you can use the QR code feature anymore already. Yeah, that's why it's better to have 2 or 3 different payment methods so that you won't be stuck with your funds lah. And when it comes to those payment methods, right, it doesn't only apply to emergency funds. These payment methods have to at least beat inflation, and it has to be liquid lah. Now, obviously, if you want it to be your main spending method, it has to be instant lah. Okay. But in the case for emergency fund, this slide is from Han Liu, who is a certified financial planner. What he recommends is that, well, obviously it has to beat inflation. Then you can withdraw it in less than 1 to 2 business days. And the third most important thing is there is low to no market risk. Meaning if tomorrow the broader market drops by 20 to 30%, you are still having the full value of your emergency funds. So fixed deposits, current accounts, saving accounts, they don't really meet this requirement. Yeah, fixed deposit, although right now they offer you very healthy returns. The highest is like 4%, actually pretty good. But it's not liquid. It's not liquid in the sense that if you redeem it early, right, there is already a market risk. In that, you will lose all of your earned interest, right? And if you don't want to lose your interest, then it becomes not liquid already. So current accounts, saving accounts, these are ones that is like your traditional bank accounts, your Maybank, your CIMB, right? They are currently offering 0.1 to 0.2% per annum money, which is hopeless in beating inflation. So what Han suggested is that, well, you can actually use your EPF account treat because 10% of that balance can be withdrawn anytime, right? And this actually beats inflation, 5.5 to 6% per annum. Actually a very, very good return. And it's also liquid. You can withdraw in 1 to 2 working days. There's little to no market risk. The government actually guarantees 2.5% annual returns. So if you're looking at your current emergency funds right now and then you find that you are not at the threshold yet, i.e. 6 months of your income to store as your emergency funds, right? The other option is to take a look at your EPF account tree and add it up together to see if it meets the threshold or not. Or if you're like me, I don't really like to mix up my retirement funds with my emergency funds lah. So that's why I save my emergency funds separately in these places manually. That one also can. With that said, this is the table of the cash apps, at least the most used cash apps lah, that I have tried out in the market, except for CAF Digital Bank. Okay, I'm not going to go through all of them. The list is actually very long. I've mentioned about AEON Bank already. There's also Rise, Touch and Go Plus. I'm sure you guys are familiar. So the ones with the green star over here are the apps that I recommend, that I'm currently using and have a very positive user experience with it. The ones with a cross is the one that I've used before and then I find is not very nice. Okay, so Mumu and Stashaway. Okay, so Stashaway right now, right, they're offering 6% per annum. So somebody in the chat mentioned this. It's very good that they brought this up. I think somewhere over here. Yeah, oh, up there if you scroll upwards a bit more. Yeah, enjoy 6% returns for 2 months, right? But if you read the T&C, it's only for the first 1,000 new clients. So there's a chance that you register right now, you may not even get it lah. Okay, and it only the minimum deposit is between 5,000 to 20,000 ringgit. If you deposit below 5,000 ringgit, well, you won't get the additional rate lah. You will get about 3.6% per annum. What I dislike about Stashaway is that the deposit and withdrawal process is very complex. If you're a Stashaway user, you will know. You have to go through this JomPay thing, and after that wait for them to WhatsApp you, which feels a bit inconvenient to me, which is why I decided not to use it. I don't know whether they changed the process now or not, but yeah, that was the process that I had previously. Now, as for Mumu, it's just too complicated. Even though they're offering 5% per annum for new users up to 10,000 ringgit. If you download the app and you try using it yourself, you will know. Unless you're an experienced trader, you will find Mumu's features just too much. There's so many things going on, you don't even know what to focus on. The withdrawal process is actually much more complicated compared to Stash Away, and you don't receive it within 1 to 3 business days. You actually have to cash out from that fund first, wait 1 to 3 business days, then the funds arrive to your Mumu account. From the Mumu account, then only you can cash out, which takes another 1 to 3 business days. In this case, this option actually doesn't meet this requirement over here, i.e. it's liquid, you can withdraw it within 1 to 2 business days. Now, as for digital banks, here are the ones that are currently available. So CAF Digital Bank is actually pretty new. I don't really recommend it. I actually haven't used it yet because I went to the App Store. There are so many negative reviews on this digital bank. As for GX Bank, yeah, amazing travel card. I used it during my trip to Kyoto and Osaka in March and actually compared it to three different cards. There's AEON Bank, there's Touch and Go Visa, as well as Wise. So the purple bank turned out to be the clear winner out of these four options. Right, let's move on over to credit cards. Yeah, I'm going to have a bit of backlash over here because I'm not really a fan of credit cards. I'm only using one just to build my credit score. Now, to be fair, credit cards have a lot of different types of rewards to accommodate different types of customers. You want cashback for petrol? Got. You want miles for travel? No problem, right? But very often when you look at these rewards, right, they are either restricted to a certain category or they have very high spending requirements and they are also capped. Yeah, most of the time, the cashbacks provided by credit cards, they are capped. And if you look at HSBC Life Plus credit card, right, which if you go to Mid Valley, there's this agent that always will talk to you and ask you, will tell you that, oh, you can earn 8% cashback, But things are actually a bit too good to be true lah, because it's capped at 30 ringgit per category. So it's not like dining 1% you get 30 ringgit, then plus 30, then plus 30, 90 ringgit in total. It doesn't work like this. It's dining itself, this whole category is capped at 30 ringgit. Shopping is 30 ringgit, entertainment is 30 ringgit, so on and so forth. And you need to spend above 5,000 ringgit, then you will only start to unlock the higher cashback tier. If you're a lower spender, let's say this month you want to stick to your budget a bit, right? You spend, let's say, only 970 ringgit. In this case, your cashback drops down to 0.19%. I know, right? It's very far away from the 8% cashback that they advertise, right? Well, if you're a high spender and you regularly already spend this much every month, then probably a credit card is good for you. Maybe this credit card might be the best for you as well. But in this case, it is not near the 8% cashback that they advertise. The effective cashback, according to this calculation over here, is only 2.1%. So the moral of the story over here is don't get too uh, tempted by all this credit card providing cashback, because very often, right, behind the scenes, there are a lot of requirements to be met, right? And even after you manage to achieve all of these high spending requirements and whatsoever, right, you still have to look at annual fees. In the case of this HSBC Life Plus credit card, right, if you don't spend more than 24K annually, the fees is 300 ringgit per year. Okay, and then on top of that, there's a 25 ringgit SST that you got to pay. Now, some people will say that, well, okay lah, not every single credit card will charge you annual fees. Some credit cards, they waive annual fees on. But you got to watch yourself. You got to ask yourself, am I buying a credit card to control my spending, or am I spending more just because I want to achieve these cashbacks? This is why credit cards are a very dangerous tool. Yeah, some people, they use it to get more rewards and they end up spending more because they want to meet the higher cashback tier. So rather than helping you save more money, credit cards may help you spend more money also. But obviously there's the other aspect of like you're able to take out short-term 0% interest rate loans paid in installments. Yeah, that one is very good, but only if you are well versed in managing your finances. Okay, so we can argue more about this during the Q&A session later, all right? Anyway, savings pots. Yeah, I really appreciate digital banks that offer savings pot features. So this one over here is AEON Bank. The next one is Rise, because it allows you to segregate your budget accordingly. Now, obviously, ASB, if you're a Bumiputra, automatically ASB becomes the best place to grow your emergency funds right after EPF. Because EPF, if you deposit your funds over there, only 10% go towards account flexible, right? But as for ASB, the maximum individual limit currently for Bumis is 300,000 ringgit. But what I don't like about ASB, even though I'm not a Bumi, is that you got to lump all that sum into one giant portion. So you end up saving that 50,000 ringgit and you tell yourself that, okay, this is for my wedding, this is for my new car, this is for my emergency funds. Then things get a bit messy. Okay, So even if I have the option sometimes to deposit more into ASM, I may choose not to. I will choose to opt for those that have savings pots, which is why you see during the start of my presentation, I did mention that I store a bit of my emergency funds in Rise. And based on all these savings pots that I've created, you can see the different types of goals that I'm working towards right now. Okay, up next, yield hunting. Is this worth it or not? Yeah, a lot of people online, when they see a new app offering 0.1% extra rate, let's say 4% or something like that, they end up moving their whole house over there, thinking that it's worth it. Well, for every 0.1% profit, extra profit, it only translates to extra 5 ringgit per year on your capital of 5,000 ringgit. So honestly, it doesn't really make any meaningful difference. 15,000 ringgit, that's only like 15 ringgit per year. So therefore, to me, it's not really worth the switch unless the difference is about 1 to 2%. So for example, when GX Bank reduced their earnings rate from 3% to 2%, right, that is tremendous, which is why I moved quite a bit of my funds out from GX Bank to all of these options over here. And the average of all of these options are about 3 to 4%. So that is the earnings rate that you should fixate on right now. But bear in mind, switching over to a different cash app or different digital bank just for plus 0.1 or plus 0.2% profit, sure, you get like 30, 50 or 100 ringgit extra per year, but this is not the habit that will grant you financial freedom. The bigger fish to fry is the habit of saving and investing. The first habit over here, where you pay yourself first, you set aside a 10 to 20%, regardless of where this is. Don't listen too much to Shinji or whatever influencers say. You just opt for a cash app that can help you beat inflation. Okay? That is a more important habit than trying to look for which is the highest rate right now. I want to go and hunt for that extra 0.1%. Yeah, because math-wise, it really doesn't make a lot of difference. Okay. Now on to investing. Okay, so investing, I'm currently using the rule of 100. Very simple rule. Take 100 minus your current age. That is the percentage of risky assets that you should invest in for your retirement portfolio. So I'm currently 28 years old. We round it up to 30. 70% of your asset is supposed to be invested in risky stuff, such as gold. I'm using Versa Gold. Bitcoin. I'm using Luno. US stocks and ETFs, specifically the QQQ and Rakuten. Malaysian stocks. I'm involved in Maybank, Public Bank. I also buy a bit of tech stocks such as Inari and Timecom. Aggressive unit trusts. These include the CAF Core Income Fund in EPFs I invest. Now, this list is not exhaustive. Don't get too excited when I post this list over here because there are still many other places that I didn't mention which can help you grow your retirement savings. Now, investing itself is much more important compared to choosing what sort of asset to invest. Okay, so if you haven't started yet, the most important thing is to always start first. Don't be too concerned about what sort of percentage that you want to allocate within these few assets. If you were to buy something you saved up for, would you spend from your salary account or investment savings? Now, this one without a doubt is with your salary account. Okay, because if you're investing for the long term, you wouldn't want to liquidate it at not a good time. Now, let's say if you're going through a bear market right now and your investments drop by like 10, 15%, and then you want to buy a new handbag, right? It doesn't make sense for you to withdraw from your investment savings to buy something that you want or something that you saved up for. So more importantly is you create a fund and then you just gradually build towards it. Okay, this goes to a big point of my session today also, why savings pots are important. Now, if I want to work towards a goal, a Japan trip, let's say, right, I will create several savings pots across multiple apps, in this case AEON Bank and Rise, and save in both of them consecutively. Okay, now some may say, oh, why don't you just use Rise, because Rise gives 3.3%, right? But I don't really like to save too much money in one particular app. So for me, I just split it into two, half, and gradually save towards my goals. Okay, so answer to this question is you create a savings pot within a digital bank itself, and then you gradually save towards that goal. and try not to spend your investment savings, because if you are investing for the long term, right, you want to keep your profits at that way and then only liquidate it during your retirement or whatsoever. So next one, this one is actually a very good question. So I saw your expose, you showed that you use Versa for investments. From a brief check, their growth funds versus stash away, the fees are actually double. They are 1.5% per annum versus stash away 0.8. I also compared their money market funds, Versa Cash I 0.3% management fees, stash away simple 0.15% management fees. Any thoughts? As I have to admit, my opinion is based on a very brief check of the rates and not of other factors. So what you got to know about Versa's returns, okay, right over here, okay, whatever returns that Versa has indicated within the app itself is already net of fees. Okay, let's say you're currently using Versa Cash, which has delivered 3.89%, I think in May, yeah, per annum, 3.89% per annum in May. That is what you get. It already has calculated the fees already. So when they say the return is like 3.5, you see what you get lah. Okay. But as for stash away, I am not too sure whether within the earnings rate itself, they have already included the fees or not. Okay, because in their website, they mentioned it's a projected 3.6% per annum, which if you scroll up over here, you can see. Okay, and this promo that they're running recently is only for the first 1,000 new clients. But anyway, I hope that I've given you a better idea on the returns that Versa has shown within the app itself. And more on the investment side, right? I actually don't use Versa to invest in their different types of funds. I only use Versa to invest in Versa Gold. And in this case, Versa Gold's annual fees is 0.33%. It's actually very low, yeah, compared to all the other options out there. There is Versa Gold Dinar. Yeah, obviously Versa Gold Dinar is the cheapest. I'm just going to write it down. So gold-wise, cheapest fees is Versa Gold Dinar. At least they have been waiving a lot of their fees until December, I think. Then most convenient for me is Versa Gold. Why? Because if you are a regular user of Versa, right, and then you are just saving in Versa Cash, at the same time, if you want to move a bit of your funds over to Versa Gold, just got to switch those funds, right? So because I'm already managing so many different types of apps, right, I wouldn't want to go through, I wouldn't want to create a new Versa Gold Dinar account just to save like a 0.1 to 0.2% in fees, right? So this is entirely up to you guys lah, your own preference, all right? So next question, let's see. Hi everyone, is there a difference in terms of dividends between account 1, 2, 3 and EPF? There is no difference. So all three accounts will receive the same amount of dividends from EPF every year, which makes account 3 a very good option for your emergency funds. But bear in mind, when you contribute, let's say voluntarily, 1,000 ringgit to EPF, you cannot select which account to voluntarily contribute to. It gets segregated into the 75, 15, 10 ratio, i.e. 750 ringgit goes towards account 1, 100 ringgit goes towards account 3, and the remaining 150 ringgit goes towards account 2. You cannot choose which specific account to contribute. Quite a few people have made this mistake in the past already. So try not to make this mistake, okay, if you're planning to top up your emergency funds or whatnot. So next, let's see, okay. CAF Digital Bank is bi-weekly. Yeah, okay, thanks for bringing that up. They didn't really mention it in the website, so that's why I couldn't find it. Next question. I'm new to managing my finances. Can we talk a little about insurance? What's important for someone who just started working full-time? Okay, so in response to your question, I actually attached over here a list compiled by ChatGPT, not me. Okay, so credit belongs to ChatGPT. This is a very helpful list. Okay, and I've showed it to a few of my friends who are agents. They thought I compiled it. Okay, but actually no. It's actually compiled by ChatGPT itself. And it's a very good reference on what sort of insurance that you should opt for based on your current age and what you're doing. So to keep things simple, a medical card is what you must always opt for, no matter what the case is. Okay, and the price range, just nice. I made a post about it last week. The price range that you should expect is between 50 to 150 ringgit per month, round it up lah. Okay, you can see the options over here, and then you have a better idea on what's the price range of medical cards. Okay, I attached it right here already. Then after medical cards, right, you should consider personal accident if you're frequently riding a motor. Let's say if you are a Grab driver right now, okay, and you deliver food, right? So probably you might want to consider personal accident on top of it. Critical illness, if you know your family has a history with all those diseases lah, okay, heart attack, cancer or whatnot. Life insurance, only when you start to have dependents. Let's say your parents do not have enough income right now. They rely on you a lot for their monthly income, or you have kids already, right? Then it makes a lot of sense to have life insurance. Okay, if you are the sole breadwinner of the family, then definitely a life insurance is what you have to opt for. Okay, so yes, this list is actually very helpful, and it doesn't even mention what sort of products they need to buy. So then the rest of it, you got to do your own research. Okay, next question. Don't you get tired of trying to gamify your investments by moving money everywhere just to get a few percent increase? I've been doing this for the past few years, but it took my mental power to keep track of where's my money. Nowadays, I just stick to TNG for daily spending, ASB for emergency fund, Versa Cash, the bare minimum one. Don't even bother with quests for sinking fund. Yeah, this is a very good statement. Okay, and I don't get tired because it's my job to do this. It's my job to actually go and compare different types of cash apps and then provide an honest review to you guys so that you guys can stay more informed. But if you're, let's say, working 9 to 6, right, and then you come back, you just want to chill, watch a bit of Netflix, you wouldn't want to go through that trouble of like, oh, I got to move my funds from, say, Versa Cash over to Touch and Go lah, because this month Versa Cash payment is a bit low. Which is why I mentioned yield hunting is not the thing that will give you financial freedom. Okay, hunting for an additional 0.1 to 2, 0.1 to 0.5% yield is not really worth it. And in fact, 1 to 2% may not be worth it to you as well. Okay, at the end of the day, you can do the calculation, man. You just need to multiply it with the annual earnings rate, and then you tell yourself is it worth that 15-20 minutes for me every month to go and decide which cash app to move towards in order for me to earn an additional 1%? If you say it's worth it, then by all means go ahead. But if you tell yourself you don't want to go through this trouble, you rather just save it in an app that gives you savings pots, or you've been using this app previously already, you find the earnings rate not bad, you want to stick to it, that's entirely fine as well. Okay, doing this yield hunting thing, sometimes I do it, okay, I do it a bit. It's more of like a feel good thing, where you tell yourself that, wow, this year I made an extra 100 or 150 ringgit. But over the long run, right, like what I covered earlier during the session, it's not this habit that will grant you financial freedom. It's the act of setting aside 10 to 20% of your pay, paying yourself first, putting it in anywhere as long as it gives you a return that beats inflation. I think you're pretty much set already. Okay, so yes, I entirely agree with this. If you're tired of moving your funds here and there, entirely understandable. Don't need to do it. It's entirely fine. Okay, so next one. I currently mostly use TNG Plus and GX Bank for daily spending, ASB for emergency funds, looking to include Versa. How should I go about it? Advice is a very strong word. I will probably say my perspective towards it. So GX Bank, why I'm not really using it as my main spending account is because it only gives you 2%. And 2% doesn't beat inflation. Inflation right now, I'm sure most of you will say it's like 3%, 4%, some people even saying 5%. But the real rate, the average is about 2 to 2.5%. So generally, you want to grow your savings, be it emergency funds or flexible funds, you want to grow them in apps that at least have like 3% or above. Okay, so how do you go about it? Well, basically you just register for the app, and then within there's like Versa Cash and Versa Cash I. Yeah, if you're a Bumiputra, you want a Sharia compliant product, Versa Cash I is Sharia compliant, even though the earnings rate is slightly lower. So Versa Cash, this product that I list over here, this one is not Sharia compliant, yeah, but their earnings rate is slightly higher, 3.89%. Okay, so next one, I started investing almost 2 years ago using Momo, bought some US ETFs, but I don't really have a plan. I'm not sure when to sell to secure my earnings and when to just hold. For example, I'm holding 3 VOO units that I bought for 460 USD. It's currently 550 USD. I don't really know what to do with it. Well, then you got to ask yourself, what are you investing for specifically? Because for me, I'm investing for retirement. My time horizon is 30 years, 20 or 30 years. So I won't liquidate it unless I have already retired. And if you have a clear goal on what you're investing for, then you have a time frame of when you need this money. Okay, so my answer to your question is that ask yourself, what are you investing for? If you're investing for retirement, then you shouldn't be worried about when to liquidate, right? Because over the long run, I didn't really show you guys this chart. It's actually not included in the slides. Yeah, somewhere here. Over the long run, the US market tends to deliver. Okay, in the past 20 years, it has increased by 400%, averaging 8 to 12% returns every year. Okay, so that's why I'm involved in the US market. A large chunk of my portfolio, about 20 to 30% of it, is invested in the QQQ in Rakuten. Now, Rakuten itself is not the platform with the lowest broker fees. Okay, I'm only using Rakuten because I'm already using so many apps and I don't want to switch. Okay, if you want to go for brokers that have the lowest fees, it's Weibo and Momo right now. Okay, so not sponsored to say this. So next one by Nakib says, I know you haven't tried Calf Digital Bank, but did you think 5% is worth it? Like the review said, app is a bit laggy, not as smooth as AEON or GX Bank. Okay, like what I covered just now, um, I wouldn't do the switch, okay, unless it's like 1 to 2%. But then again, this 5% is only like on your first 2,000 ringgit, okay, like what I mentioned over here. And you can actually do the math, right? 2,000 ringgit, you multiply by 5%, assuming that they give you 5% for the entire year, which is very unlikely, okay? So you will get 100 ringgit in rewards, in interest, in profit earned. But right now, let's say you're using AEON Bank, which allows you to earn 3%. So 3% times 2,000, right? That's 60 ringgit. So ask yourself, is it worth it for me to switch to a platform that gives me 5% of my first 2,000 ringgit when at the end of the day, after 1 year, I only earn an extra 40 ringgit? Okay? If you tell yourself, wow, very worth it, I want to make the switch, then by all means go ahead. But if you tell yourself that, hey, not very worth it, I'd rather stick with an app that is much more user friendly, easier for me to use, and allows me to pay for my things much more simpler, then stick with the app that you've been using always. Okay? So yeah. So like what I said, real wealth building portion comes from actual investment, exactly, preferably into US stocks or ETF. I agree. Fiddling with yields in savings accounts will get you nowhere. Yeah, it's more like a feel-good thing. All right, this could be a dumb question, but I want to be sure about your rule of 100 minus H percentage of asset. This percentage of asset should not include both retirement EPF and emergency funds because retirement EPF, it will usually be the largest asset. Okay, so not a dumb question, it's actually a very, very, very good question. If you're investing for retirement, right, you should include EPF within your retirement portfolio as well. Why? Because this EPF section becomes your conservative section already. If you exclude it, then now imagine now your portfolio becomes much more conservative. You will have to allocate an additional 30% to invest in safer assets, i.e. these cash apps or perhaps ASB, ASM. But if you do include your EPF, which right now, perhaps most of you, a large chunk of it, 60, 70, or even 80%, will consist of EPF funds, that is a strong signal for you to invest more in risky assets. A lot of people start with having more than 70% of their retirement portfolio in safe assets, i.e. EPF. But as time passes, with your knowledge in the rule of 100, you gradually dollar cost average in risky assets, so you end up balancing out your portfolio to more of like this percentage over here. Okay, as for emergency funds, this one is entirely separate. You shouldn't include emergency funds within your retirement portfolio because these emergency funds, they are not for your retirement, right? They are for an unexpected event, like maybe you crash your car and then you want to fix it, right? So then this should be entirely separate compared to your entire retirement portfolio. Okay, so if you do want to learn more about like how I'm currently investing for retirement, what is the percentage or whatnot, I will send you guys the link to our WhatsApp group later. There is a free trial period. You can join our group first 7 days for free. Then it's like 48 ringgit annually. Okay, so over there, I'll share a bit on how I'm currently investing for retirement or whatnot. Shout out to all our gatherer members: CHG, Jinden, Andrew, Wendy, Alex, Sissy, Urshad, Caveman, Kelvin, Tommy, Jinkang, Adrian, JS, Duhan, Sufi, Faris, Alan, Jackson, Raizan, Hudson, Jeffrey, Lukman, Jack, Kartik, Arif, Melvin, Leanda, Adam, Ashley, Sean, Jason, Putra, Alvin, Aldrin, Chaiwei, Kimip, Justin, Michelle, Aisha, Chi Sing, Wenyi, Alvin, Gajan, and Rafe, as well as all of our learner members.